All right, welcome back to the Finance Corner. So we got a new update for our options account where we're trying to flip money slowly with the options wheel strategy. So as you already know, that's what we're doing. So this is where we're at, and this is the next update. And so here we are. We got our individual. We're slowly getting that back to where we started. So we started this account again at the beginning of the year with about 7,500 buckaroos. You can see January 5th, and then we had ups and downs. And now we're getting back to our starting cost. But what's more important is we're actually up. The only thing we really need to happen is our Coles shares to appreciate back to our cost basis, which was around like $19. So we just need the shares to come up and appreciate, and we'll be sitting on some nice cash. Soon enough, I want to say the goal by the end of May, I want to have 10,000 cash. I will say that. If the coals can appreciate during this month, which I feel like May, I don't remember how the market does seasonally in May, but we can look at some technical charts later. You can see we're pretty much at all-time highs. There's just some individual names that are like lagging, like consumer discretionary, like Kohl's. So yeah, I'm thinking that we're gonna be able to get some nice recovery on that soon. But just for this video, let's talk about some of the option selling that we did because we did collect a decent amount of premium since my last update. So I'm just gonna go right into it, and then I'll explain the trade that we are in right now. So, if I remember correctly, I think, yeah, this was the one that I did. Okay, so I think the last trade that I did was, yeah, I know I had this quadruple U $22 put for expiring April 24th. Yeah, we did this 9 days out. So you can see we collected about 260 to, wow, my mental math. What's 350 minus 70? Yeah, I think that's like 270 dollars. Something's wrong here. I don't know why my brain is fried. So to take $50, made 30, so $280. Made $280 from this trade. And then the next trade we tried to do, or the next contract we tried to sell, was the quadruple U for, I think this is expiring, yeah, for expiring a week out. And then we couldn't get the limit price at $1.10, so we went for the $1.01. So we actually got two contracts at $1.01, credited us $202, and then that also went well. And you can see the premium we collected is $1.04, and we bought back at 24 cents. You do that math out there, 202 minus 48 means roughly like $150 that I made on that trade. And we can kind of take a brief look at the price action. So let's say, for example, the April 24th, I know we wrote one on April 24th, expiring May 1st. So that is April 24th was the Friday. So one thing that I'm really starting to like about this strategy is like I see it very similar to how you can be with day trading in the sense of like you want to buy low and sell high, right? Well, it's the same thing in premium if you're trying to collect premium. So I seen that on Friday, trying to remember correctly here, I think we closed out. Okay, no, so that's what we did. On April 23rd, we closed out, so which is that Thursday. So it actually worked out perfect for me. So I remember, yeah, we spiked. This is Thursday. We spiked to 22, almost $23. When we did that spike up here, actually point this out here. This move here, when we spiked that high, I was in my contract for the $22 put. As you can see, we were above $22 here. So that's when I was able to close with my 75% profit rule, and it was beautiful. It was beautiful. Like I just set the alert at when we got the breakout for 22. We got the breakout. I just checked what the price of premium was giving, and I see, it was like I can buy it back for $35, meaning I keep the. I mean, I could buy it back for 35 cents, meaning I keep the $1.45 or $1.40. Like I'll take that, So that happened on Thursday, and then I was like, you know what? Let's see. Well, I was like, let's see what happens on Friday. We actually dumped like crazy on Friday. And I was like, that's beautiful. That's perfect. Because there's a couple things that lined up for that trade specifically. So when price dropped to like $20, premiums are gonna drop and be extremely cheap. So I was like, all right, actually no, sorry. Premiums, since I'm selling a put, I kind of went out the money. I did an out of the money put. So I think I did a $21 put. Let's see what will it was, yeah, exactly that. It was a $21 put, and at the time when I put the trade on, price was hovering around $20, like underneath 21. So it was a little out the money put. That way I was able to collect a higher premium. So that is why it lined up perfectly for me, because if if it didn't drop as much, I wouldn't have been able to collect as much premium, and then it would have been better if I waited. But since it actually dropped so much in Friday, and I want to sell a $21 put, that's not a bad, like, because then it can just recover the next day, right? Which it started. It looked like it was about to, but it didn't get all the way back to above 21. And even when it did, it wasn't enough for me to my 75% profit to close it. So basically, we wrote the trade that you see here on April 24th. We wrote that contract at the low of the day, roughly around the low of the day, and it expired on May 1st. So, and we collected the $1.01 for two contracts, so we got $202, right? And then it was just a matter of waiting. So, like, what I wanted was to get like some war headline over the weekend, and then we see price like spike for Monday. We did see a higher prices on Monday here, but it didn't go all the way past, like, the higher it goes past my premium, past my strike prices, the more that we would have been able to collect. So let me actually speak a little bit clearer. The strike price was at 21. So yeah, again, we had to see it get above this price, which on Monday it did for a little bit, but it didn't give me enough of premium to meet for me to close out. So I waited Tuesday, I waited Wednesday, I waited Thursday, and I was like, damn. Well, Thursday is really, I think, when I closed it. Thursday, I think, is when I closed it. So you can see we wrote that here. Yep, got the $1.04 or $1.01. And then April 30th, which was the Thursday, right before market close, which is 4 p.m., it was just like, you know what? I see that I have my 75% profit. I'm just going to take the money and move on to the next one, because I didn't really want to get it signed. The goal was to just generate some premium on the money we have, and we've been successfully doing that. So, yeah, I collected or bought to close the 21, the same option that I wrote, and I was able to collect the difference in premium. I think that was the very last trade that I did. And now we can talk about the newest trade that I put on, which is a completely new ticker, but it's similar to the strategy that we've been doing. Similar to the strategy we've been doing, right? So instead of SMR, or instead of UUUU, we are looking at SMR. So let's go take a look at that chart real quick. One thing I want you to notice, though, is how these are both energy companies. They're in a little bit of a different niches. Like SMR focuses on small modular reactors, and UUUU just more focused on mining of the rare earths. But they both energy companies, and as you'll see in the price chart, they actually trade fairly similar. They actually trade fairly similar. I don't have my TradingView subscription. I'm gonna update it because it'd be much easier to be able to see both of these charts aligned. But just take a quick look. So you see how made a high of 20 a high in January 28th, end of January, and we kind of like consolidated lower, and then just take a look and see how similar the price actually moves to um, UUUU. If I can find it, here we are. So aside from the massive dump that we have here, in the recent days, you can actually see the price is actually moving very similar, and it makes sense because they're similar. They're they're both energy companies. So just to take a look again, you see we kind of having like a nice little accumulation area here. It looks like we might get a breakout on UUUU, but SMR doesn't seem to have the same amount of strength on it. But what I did like is how we kind of hit a low, and then we kind of are showing like an attempt to go higher here. So let me draw this out. We have the market showing a low here, and then the market also sweeping it. So you see April 7th made a low of 921. 2 days later, made another low. And then on Monday, we actually swept that. And then now it's like, all right, let's trade a little bit higher. Let's trade a little bit higher. And then there's Oklo, but Oklo trades very similar as well. But we're looking at SMR. And then so it's from here, one thing I think the trade that I put on, let me explain that actually. So it falls in line with earnings. Because here's the risk that we have. Let's talk about the risks first. Let's talk about the risk. So my strategy is telling me that this could be a potential bottom with a potential to start trading a little bit higher. I want to say that we can see, I wouldn't be too surprised if we do get a pullback, um, even to like the 786 area, because the whole idea of it is like, okay, if the smart money is accumulating at this low here, and then they ran it up to this high, well, what's a discount of that? That's what this whole tool is for, the Fibonacci tool. And then you can see 50% is like not a bad area to start reaccumulating. So, two scenarios. It can either just bounce out of here and continue much higher, or we can actually dip a little bit lower into this zone, maybe fill up the 786, or maybe even fill in this imbalance here or this gap there, and then from there we might be able to see some higher prices. So again, either two scenarios that I'm looking at. I'm kind of hoping for this scenario here where it just goes up first. And here's the thing though, we have a catalyst. So SMR, is an energy company that they focus on making nuclear energy and providing it for data centers. The problem with it right now is that they're not really profitable. You can take a look at any of their previous earnings reports. They have negative earnings every time, right? So, but my thing is, and I think when the reason we got this huge sell off last year, because I was doing some research about how they basically weren't as honest as they should have been with investors, and investors didn't really like that. With I forget the specifics, but there is some of their one of their so either a product or a contract that they had that they weren't really the most transparent with their investors, which is like kind of who you would need to be transparent with. So after that happened, and after that came out and got public, I think it was a lawsuit. You could see them drop as low as they're down 80% since last year October, which is pretty hilarious. But you know, I'm honestly all for energy. I like the idea of energy being needed to power these data centers because it doesn't seem like the AI train is going to stop anytime soon. So that's my kind of bullish outlook on this company. So which is why I don't mind selling puts on it. But that being said, this this thing is paying some premium. So let me just explain the contract that we have written out, and then we'll wrap it up for there. But these are the two scenarios we're kind of looking at. Either it goes straight up, or it might do a little bounce below here, maybe like sub $10, and then maybe we can get a bounce. Or the worst case scenario is like it comes down and then it just like continues its trend lower and like breaks this low here. That'd probably be the worst case scenario. Because then, as you'll see in a second, my cost basis will be around somewhere around $11. But here's the contract that we actually wrote on it. So we did a $14 put expiring next week, 1 week out. Because today is Sunday, May 3rd. I forgot to mention that at the beginning of the video. But today is Sunday, May 3rd, and we wrote this contract on Friday, expiring on Friday, May 1st, expiring on Friday, May 8th. So why do we pick a $14 strike price? So here's my thought process real quick behind it. The stock is extremely beaten up. Stock is extremely beaten up and beaten down from last year's lawsuit. And you can see we're pretty much near all-time lows. If you zoom out, actually we're not near all-time lows yet. I forgot it got as low as $2 in 2024. So another energy company that's extremely volatile, right? Extremely volatile. But one thing I do like, actually, let me point this out here, because if this is to be an institutional candle, and then let me do this. Okay. So I actually like how, okay, yeah, I like this. I like this. I don't think I'm leaning towards bullish, but obviously because I have my trade in that direction. But I feel like we should get a nice bounce. I think we should get a nice bounce, especially with all we need is one good war catalyst over the weekend, and then we can get much higher on these prices. But the why I did a $14 strike price, well, because a couple things. At the time I wrote the trade, I think price went lower. So yes, I did kind of try to maximize premium here, but the reason why 14 was the perfect strike is because if this thing is to get, like, I like where we're at right now. I like where we're at. I like how we bounced back. We retraced to the 61%. Excuse me. I like how we retraced to 61% of the run here. That tells me that this is not a bad area for smart money to continue buying. If that is the case, and they continue buying from this area, and we get the best case scenario, which is we just run out of here, we should get past $14, like 100%. If we break out from the earnings catalyst, we will see higher prices past $14. And then once that happens, I'll be able to collect my 75% profit and move on to the next one. So that's the goal here. So if we just do this math out real quick, just do some quick maths, right? As they would say in London, some quick maths. So you do $14 minus my premium. So the strike price is $14, right? Minus $2.05, because that's what we got paid in premium. That means that gets $11.95. So that is our cost basis. So in the scenario that Friday comes and price didn't break out, we would be getting assigned those 300 shares, because again, I got three contracts at 205. In the scenario that price is underneath $14, would be getting assigned at the cost basis of $11.95. So as you can see, that's a very large like wiggle room here. Like, even here's the thing, like if price doesn't break out and we say we get the next best thing, which is like $13, if by the time Friday comes and the price is at $13, we're gonna get assigned, right? We're gonna get assigned those 300 shares, But here's the cool part: we get assigned at the cost basis of 11.95, which is here. Maybe I should draw the line out. Maybe I should draw the line for the cost basis. Let me get rid of all this other stuff. Get rid of all this other stuff. But the strike price is $14. But based on the premium that I collected, if we do get assigned, we're only getting assigned at 11.95, right? So all price has to do is really stay anywhere in this area. So like the best case scenario is price is above this area, right? That's the best case scenario because then we get to collect the full premium. We get to collect the full premium, and I keep all of my $600 collateral, and we move on to the next one, right? The next best scenario is price stays below 14 but above 11.95. That's the next best scenario. That's the next best scenario because we're gonna get assigned in this second box here, but we can immediately sell those shares and collect our money back. You know? So it's like I'm really liking the strategy. I'm really liking the strategy. Like you have so many options in your toolbook, in your toolkit, and it's like it's amazing. So again, just to highlight the risks of this trade, it's like if it goes down, if it drops significantly and like even below my cost basis, that's when we're kind of like that's when we're gonna end up in a scenario with Coles where we have to hold on to shares, right? But hopefully, that doesn't happen. We'll see. We will just see. I have my technical reasons for why I think it is gonna break out, but I could be wrong. Never discount that part. Like any analysis that you can do, no matter what, you can be wrong, right? So I am accounting for that. Worst case scenarios, we have to hold shares again. But with how volatile this stock is, I feel like even if we get assigned those shares, it's not going to take long before we are able to sell it again. Maybe like a month to like, not a month, but like maybe like 2 weeks to like 3 weeks max. And then, it gets above our cost basis. We sell it, get our money back, and then on to the next wheel, right? So that's the scenarios we're looking at, and that's the newest play that I did. We'll be back with another update to see how that did. And yeah, this time we're actually going for a lot more premium. So let me do this math here. The rule is 615 times 75%. I'm only looking to make like at least $461, which is crazy to me. Where it's like I'm only trying to make $400. Like that's wild, right? Like imagine if I had even more money in this account. Like if I had 70,000 instead of 7,000. You can add another zero to that. Be like, oh, I'm just trying to make 4,600. Just trying to make 4,600. Like, what? I'm telling you guys, this is the strategy. This is it. I wish I found out about this sooner, to be honest. Like, the wheel strategy. All you gotta do is just understand some numbers. And then, you do have to understand some stuff. You do have to understand some stuff. Because, like, I understand both risks of this trade. Like, I do want it to I went into it just for the premium, but like, I understand if I get a sign, it's not a bad company to hold on to. And I'm bullish in the energy space, right? So it makes sense for me. It makes sense for me. But, anyways, that's where we're at. Um, I think the market, we just briefly talk about the market real quick. I think the market's at all time highs from last week's close, which is very interesting. Uh, just yeah, it's gonna tell me like I want Coles to reach all time highs again, but like look at this. S&P just did a very nice V-shaped recovery, and we're just off to the races. But that coupled with like oil is also spiking up higher. There's a lot of the volatility in the market right now. A lot of volatility in the market right now. So I just feel like if you're not participating in it, it's like you're doing yourself a disservice. You could be on either side. You could be like me, just selling premium, or you can be making bets on directions, like buying, trading. But it's like I think selling premium is probably like the best strategy for me on this account right now. So with that, I'll leave it to you guys, and I'll see you on the next one for more updates. Thanks for watching, and peace out.